The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 8th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential. Because living up to our potential, that's something you and I must master each and every day. So let's begin our day with an empowering belief or two. I wish we could empower the folks in charge out there to get the heck off the airwaves and go do your job. But we can't control that. All we can control is the meaning we want to give things in life, folks. So anyways, let's begin with an empowering belief. And I believe that each of us, you and I, we have no idea of the giant capacity that we can immediately command when we focus all of our resources on mastering a single area of our lives. One of those areas of our life that I believe we should master, it's trading. It's trading and investing. Another area is time. You see, once we master time, we understand that we overestimate what we can accomplish in a year, but we underestimate what we can achieve in a decade. Another reason that some of us, not you, but some of us don't achieve what we truly want is that we never direct our focus. We never really concentrate our power. Many folks are dabblers. They dabble their way through life, never deciding to master anything in particular. Success, you know this to be true. Success, all the success in your life, it comes from taking the initiative and following up, being persistent, always expressing the depth of your conviction. The question each of us need to have each morning is, what simple action can we take right here, right now, today, to produce a new momentum towards some area of success in our life? This much I know to be true. The path to success, it's to take massive, determined action. There is no abiding success without commitment, folks. If you want to be successful, the easiest way, find someone who has achieved the results you want and copy what they do. They've got a formula. And guess what? You'll learn that formula. You'll achieve the same results. The time is now to master anything it is that you want in your life, because mastery, as Tommy O'Brien says, it's a beautiful thing. Another way to live, if you knew that everything was going to turn out okay, how would you live differently today? The question is always, for each of us, not what we would do if we had the means, if we had the time, if we had the influence or the educational advantages. The question is always, what are we going to do with the things that we do have? And the reason is, and I hope you believe this, I hope you know this to be true, you do have an amazing power within yourself. Let's go check out the power of these markets here. Right now, we've got the Dow trading down 31 points out at 14,905. S&P off 2.5 points, trading at 1673. NASDAQ off 11 at 3759. Russell 2000 down. Oh, it's really flat. It's trading out at 1065, so no movement there. NASDAQ 100 off 13 points at 3202. New York Stock Exchange, a laggard here this morning. That's interesting. Only down 0.1%. That's off 15 points. Goldilocks up $2.50, trading out at 13.27. Silver up a nickel at 22.44. Nice day in silver yesterday. Light sweet crude up 71 cents at 103.74. Natural gas up against resistance, potentially getting ready to break out. Over in Europe here this morning, we've got the DAX trading down 16 points. The FTSE, it is giving up. It's down 1 full percentage point. It is off $61. And in Asia last night, it was green across the board. If we take a look at the Nikkei, up 41 points, the Shanghai up 24, and the Hang Seng up 204 points. Our call number, 877-927-6648. If you give us a call, we would be happy to take a look at your stock chart or anything it is that you're looking at trading. Let's start off by taking a look at Basil's VIXI. I think he calls it the VIXI, something like that, the VIX index. Right now, that is trading at 1927. As A to B equals C to ups go, this one's got a strong C to D leg. 20 1.12 is what would go ahead and complete a 1 to 1.272. It's traded at 1927. Your 0.786 Gartley sell pattern on this would take us to the 1975 level. We go see what that pattern actually looks like. If you are watching us on Tiger TV, well, you're seeing me draw that in on the screen. And if you're listening in on your mobile device, your radio at MOB at TFNN.MOBI, thanks so much for doing that. We appreciate that. Remember, you can always catch the live stream of this by going to the homepage of TFNN.com. On the right-hand side, check out that upper right-hand button that's got the three little smartphone devices. Click on that. This show will stream live to you. But that C to D leg out here, pretty strong. Actually says, we see it close above 1975, a move of a move, 100% move of a move, getting you back to 2191 would be in order. If that's going to be the case, then you're going to see the downtrend continue inside of the equity market. Let's go take a look at a couple of the other. Well, we're going to take a look at everything. We're going to try to put this all together for you. Here's a little divergence for you to be paying attention to. Don't really talk about it too much, but this is the daily chart for the semiconductor index, the SOX index. It's been trading a nice 43-point consolidation range out here, and it's trading above resistance. Resistance really being the doji candle from July 17th. The price is $493.20. If this market breaks to the upside, folks, keep your eyes glued in this area here, because this has also not broken down. What's the triple for the SOX? SOXL, probably L for long, and SOXS for short. But this has not broken down. Nice 43-point range. Neither overbought nor oversold. The beauty of what the markets have been doing here, especially for the strength in the market, is it's just simply been, in essence, moving sideways. Well, the market, with the Dow has not been moving sideways. That's been moving lower. The S&P has certainly been moving lower. But inside the SOX index, inside the NDX, inside of a number of places, that move lower has just really helped some of these that were in an overbought condition to work that off. And this is a pretty impressive looking chart out here. In fact, it's a very impressive chart because it has not broken down at all. This market will not move lower without the semiconductor index moving lower as well. So there's a little divergence or a heads up for you. We take a look here at the transports. The Dow, taking it in the shorts down below the 0.786 retracement level. But the transports, slightly below the 0.382 area. Hey, look, it's still in a little bit of a downtrend. It is back inside the lower part of the range, what I mean by that, it is below the May 22nd high, which is 62.85. It's at 65.35. So it's not below it by a long shot or anything. So the Dow transports within, are holding up pretty darn well out here. Something to think about. A slow roll? Yeah, a very slow roll for sure out here. The New York Stock Exchange, let's go take a look at that. Let's go see what it is doing. The New York Stock Exchange right now just simply testing a gap up. That gap up from the trading session of September 10th, from September 9th to September 10th, the low of which is 95.7840 or 95.88. That level has now been tested twice. It was tested here on October 3rd. It's being tested today. So far it's held. If it does hold, you've got a strong area of support being the top of that gap, meaning the low of the September 10th level. If we take a look at retracements thus far, you're going to see that the New York Stock Exchange, the wider swath of the market, only has done, it's done about a 50% retracement now. If this area fails, meaning the gap up, then what you should see is move down to 94, 98.79. That's going to be your 0.618 retracement. But even thus far, the New York Stock Exchange looks PDG, folks. It looks pretty darn good out here. Just not any bullish reversal signals, but you're up against levels of support. So that looks pretty darn good out there. We go take a look at the S&P 500. Let's go take a look at the rest of the indexes. What is it doing? Well, you know how we took a look at the New York Stock Exchange dealing with the November 10th gap. Well, in the case of the S&P 500, it's dealing with that same gap. It's only testing, though, the top of the September 9th candle. So it's really the bottom of the gap that it's testing, which is at 1672.40. Right now it's 1674.57. Intra-session so far today, it's been down to a low of 1671.95. That is the second test of that gap as well. So the New York Stock Exchange, you can see, actually is a bit stronger than the S&P 500 out here with regard to its pullback. Also, very close to, it's probably more than the 50% level. 1666 would be your number for your 0.618 retracement level, but, not too not too bad. Still decidedly a downtrend out there. When we take a look at the intraday charts, we can see that. But let's take a look at the Dow. Let's take a look at the week link out here. The Dow below the 0.786 retracement level. It's coming into an area of support. What it wants to do is looks like it's going to maybe intersession today, move down and test the August 28th swing point, the high of which is 14,867. It has not done that. So far, the low that we have seen today is 14,885, and the number 14,867 would be the test of the top of August 28th. The close, though, inside 14,867, you know the drill. That says that they would run down and at least test the bottom of that area, 14,760. That is inside the Dow, the weak link in the marketplace. If we take a look at the Russell 2000, Russell 2000 still trading above the index, still trading above the August 5th, confirmed A to B equals CD inside the marketplace. So, again, just really a sideways move out here off the highs at 1087, but not that far off of the highs. So, still strong. Strength in the marketplace inside the Russell 2000, inside the composite as well. Still also very strong out here. No retracement to look at. If we're going to find any kind of retracement, I guess you'd have to go from the low of September 30th to the high that was put in on October the 2nd out there. But that's okay. So on a 2-day trading session, it's done like about a 0.786 retracement, but it did that all in one day. That was on October 3rd out here. So still not too bad. It is trading inside the rising price channel. So, of course, moving above it's not really a breakout, so that's not a big deal. But still contained, prices contained. I think the more important thing to be paying attention to here is that what's been going on in the marketplace over the course of the last couple of weeks, last week or so, has been that what the NASDAQ has done is it's worked off an overbought condition. And it's worked it off by just simply moving sideways. That, folks, is bullish out there. It's bullish. I mean, if and when, if what's holding the market back is our folks over in Washington, D.C., if it's just a news-related event, when that news-related event occurs, the takeoff inside the Russell 2000, the NASDAQ out there, should be pretty massive. Should be pretty massive because it's worked off that move by just simply moving sideways, and it has not backed off of its highs out there. Inside the NDX as well, if we take a look at the NDX, you can see it's just simply been moving sideways by working off a oversold condition out here. So still up north towards its session highs as well. So, that's what's going on inside the indexes. If we take a look at the ETFs out here, when we come back from break, time flies. We'll take a look at the SPYs, the IWM. We'll take a look at the Qs. We'll take a look at the diamonds. And we did have a caller. Looks like he dropped. We'll take a look at Clean Energy, I believe is the name of the company, CLNE for Tom in New York. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 18, S&P down a point, NASDAQ off 8, Russell 2000 up 43 cents. So kind of a quiet market out here today. Let's take a look at the ETFs. We'll go rip these apart here. Where the SPYs are what we're going to start off with. It's got a confirmed A to B equals C to up. That is still in place. Nothing has changed with regard to the integrity of that pattern. That would take the SPYs up to 178.30 out here. What the SPYs have done after getting into a overbought condition, that's as it made its highs out here on September the 19th, just simply worked its way off by pulling back into the 0.618 retracement number. Level 167.08 is the number. So far, intra-session today, a low of 167.05. A couple of dojis here. Yesterday was a little doji candle. Just means that it has lost its way in the marketplace. So, it was losing its way in the marketplace. I was just making the 0.618 retracement as it was coming into the bottom of this rising price channel out here. A clear break of this area, that will spell, some trouble. The trouble meaning that it'll at least pull all the way back down to the swing point of August 28th out there, which is the 163.05 to 164.09. Volume, though, yesterday, you talk about lack of conviction in either direction. Volume down yesterday, 96 million shares. Hey, the volume up on Friday, which was about as low as you could get, was 96 million to the upside. So, not a lot of conviction to either side of the market here when we take a look at the SPYs. We'll see these similar type things here inside the other ETF structures. If we take a look at the Qs out here, The Q is pulling back a little bit today. Volume 6.3 million shares. Yesterday's move down lower, 20 million shares. Friday's move higher, 22 million shares. What's it coming into? 28 million shares from September 30th. That's really the most recent swing point out here. Not enough volume to bust it down, at least no signal yet of any kind of volume to bust it down. More so a market that's working sideways and working off an overbought condition out here. And that is, as I say, it's more bullish than bearish in a marketplace. If we take a look at the IWM here, again, the small caps, what they're doing is testing the B point of an A to B equals C to up, trying to keep this a simple A to B equals C to up. That is August 5th high of 105.63 or 105.82. Yesterday's pullback inside the Russell, 32 million shares going against the swing point that has 45 million shares. So not enough to bust it down. Of course, not any kind of conviction to bust things up. But what happens is when overbought or oversold conditions work themselves off by a market that moves sideways, and the consolidation moves, folks, 65% of the time, resolve themselves in the direction that they came from. Just take a look at the IWM. There's no way you can't argue that we've been consolidating in essence since September the 18th, since Uncle Ben Bernanke Day. It's just simply been a consolidation move out here, and that is setting up for things to move higher. Let's go out to New York. Our man Tom is back. You want to take a look at Clean Energy, CLNE, I believe. Is that the name of the company, Tom?
Yeah, I'm looking for that, and the formation you see on Intel, the candle formation where you see setting up on Intel.
Yeah, so now in Clean Energy, I know you've called a few times on this, and that's something you want to take a long position in, or what are you setting up here?
It looks like it's going from 12 to 14. It's just doing like a W shape.
Yeah, I would say now Clean Energy this morning, the problem with it this morning is that it's down with 1.8 million shares, right. And so it's coming into the most recent swing point with volume. That's August 27th. Now, there was a nice bullish reversal candle formation that was a part of that August 27th. There was the 27th, the 28th, and the 29th out there. So it's at 12:21. It should be good support. The problem is it's coming in there with too much volume. So
that's big high volume.
What? Say that again?
There's a big candle there from a few days ago where it jumped up to 1369. Now that has to be tested. It's like a high volume high.
Yeah, it was tested though on the following session. That's the only problem. The high of that day you're looking at October 1st. The exact high was 1404, and the very next day it was tested at 1405. So in one sense, that high's really been tested out there.
So
now, it may be a high volume week that hasn't been tested. We'll take a look at that. So it's a high volume week, but what the weekly chart also shows you is that is it really worth? I just throw this out to you because in the $14 area, it's got resistance. Is it really worth trying to take a trade on this? At the $12 area when you've only got $2 on it. I don't know that it's worth sticking your money out there,
right.
On this. But if you can stick around, we'll take a look at Intel for you when we get back from the break. I think you're better off looking at the SOX index on a breakout than you would be on a trade for CLNE. 877-927-6648. Dow's off 12 points. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 28. S&P is down 2. We're going to go back out to New York to Tom. Tom, you still there? Oh, we might have lost him. I know I wanted to take a look at Intel. You know, I was talking earlier, we were taking a look at the SOX index out here. And if we take a look at the weekly chart of Intel, you know, it's got a nice support area all the way down. Unfortunately, it's all the way down here at the lows of $19.23 back from November. This is a weekly chart that we're looking at. But as Intel has come off that low, you know, it's traveling, price is traveling with inside a rising price channel. And you can see that here. So right now, Intel is trading down towards the low of that level. So what I would expect to see, if the markets are going to take off topside, you know, as we took a look at the SOX index, now go back to that right now. And Intel, the reason why we're taking a look at Intel is because I believe it's one of the top 5 weightings inside of the SOX. I think you've got Texas Instruments is up there, Applied Materials, Taiwan Semiconductor, Broadcom, Micron Technologies. I believe those are some of the 5 or so of the top holdings with inside there. So you got a nice little rising price channel on the weekly chart that it is traveling within. If it breaks that price channel, that spells some trouble and says that price would come down to the horizontal support area, which is about 1923. But if we go back and we take a look at the SOX index out here, the SOX index, you know, is just telling us that there is underlying strength outside here because this thing has not given back anything I mean anything. It's still trading above the consolidation point. I'm using it as a consolidation level. I'm using the high of July 17th. That is a little doji candle, and that did act as resistance. So that was our resistance line, which was 493.20 out there. So, it's holding up really well. 43-point move. That would be a nice move out there. Now, talk about some consolidation areas that are being busted, and this is a heads up to the downside. So let's go back here to my core stocks, and that's IBM. We've been watching IBM, and yesterday it broke through, and today it's having some additional follow-through. It has broken through that long-term consolidation. Oh, I was already inside that area. Little did I know. But let's go take a look at IBM out here. As we take a look at the weekly chart, you can see it's trading at 180.37, and it is clearly breaking that long-term consolidation pattern. Now, it's coming all the way back to the breakout session itself. So this is the daily chart. I'm going to pull this back. We'll lose today's activity out here. But where IBM originally broke out, or an original breakout that I'm looking at, was a nice big gap up on January 20th, 2012. So we're looking at nearly a 22-month consolidation level. So the bottom of where it broke from was the candle session from January 19th. Now, prices traveling lower, and what's really going to be important for us to watch inside IBM is the actual swing point low, which was January 13th, and that's at 177.35 to 179.61. Now, the volume there is 5.2 million shares out here. As we now pan back to the right-hand side of the chart, volume yesterday on the downside was only 3.9 million shares, but thus far today, 1.3 million shares during the first hour of trading. It's got some volume behind the move, and with IBM being the number one weighting inside of the Dow, with this being a 30-point consolidation level out here, well, now what IBM should do, it should find a little bit of support as it hits the bottom of this descending price channel that it's in. So the question is this going to be a real break to the downside with inside IBM? And if it is, with it being the number one weighting structure and having a 30-point move to the downside, that'll send IBM all the way down into the 150 area. Likewise, if it also gets back inside the consolidation area, then it would have been a false break to the downside. But this is something for us to be paying attention to. Just as, in my opinion, what we absolutely want to be paying attention to are the defined patterns that are out here. We want to be paying attention to those on the intraday charts because they are so helpful, they are so clear, just like this chart here in IBM is. And at this stage, this is pointing to a break, and a real break, because you've got some good volume behind the move thus far today inside of IBM. As long as I'm inside this sector here, or not sector, but inside what I call my core stocks, I want to take a look at it. ExxonMobil is another one. Now, ExxonMobil has not fallen apart. ExxonMobil is trading back towards its bottom of its consolidation level. So we can see that has not given way. That has not broken. And that's a large weighting with inside the S&P 500 out here. LinkedIn, that's I don't know why it's in my core stocks. It just happened to be stuck here. But LinkedIn, as long as it's there, we can see that is off of its highs out here. Let's go take a look at some kind of volume behind this move here. So far today, 1.2 million shares. Now, LinkedIn had a nice move up with volume. The trading session of August 2nd, 7.5 million shares. So 1.2 an hour. It's pulling back into that level with a bit of volume. You'd like to actually see LinkedIn come back and now test the bottom of the gap, meaning the August 2nd breakout. That's at a price level of 237.96 to 228.80, and you'd like to see it do it with light volume. Now, the cool thing about this breakout is you had good volume on the breakout session, meaning the day before on August 1st. So if this can come back and test that area in less than 5 million shares, if volume dissipates on the way down, it might make a nice little trade setup for you. Will not have broken down. That is on LinkedIn, so we'll be paying attention to that. Now, what we really want to do, so the setup, in case you didn't get, well, let me do this first. Let me go through the commodities. Let's take a look at the commodities, and then we'll come back and take a look at the trade setup and the signals that the market is going to provide to us, and really what I consider to be what it is that you should be watching for a clue from the market as to what its next move really wants to be out here. But first, let's do the commodities. Haven't done that here all morning, so let's go take a look at Goldilocks, see what gold is doing. A little bit of a sideways to upward move out here, beginning to make higher lows out here, beginning to make slightly higher highs. It needs to get above the trading session of October 1st. The high there is 1337.80. if in fact Goldilocks can close above that area, what it will do is it'll go test the bottom of that rising price channel. And I may become bullish if I can see it close above 1337.80. Without that, now silver had a nice day yesterday, but gold not participating. Now, when I say nice day, we have to put things in a perspective. Nice move yesterday, but on volume it didn't have it, either in gold or silver. The volume that it's coming into, the October 1st downdraft, 119,000 contracts. Yesterday's move up, 92,000. However, if you get gold to close above that candle, that's an important candle session, October 1st, 1337.80, it says, okay, you know what? Maybe it's time to try to take a run and get back inside the rising price channel. No idea whether we'll get back inside there, but that's what it will be signaling to us. And that's a price channel coming off of the candle session from June 28th, the lows out there. As I switch over to silver here, silver you can see having a better day up above the candle that I would be paying attention to, which was the October 1st candle. And that close, that high was 21.97. You can see we're at 22.40. So silver has been stronger than gold. It's actually given me a buy signal. However, if we take a look at that bottom relative strength indicator out there, it says we should start to see some kind of sideways move to a pullback, and that's where we really determine whether or not this is a real breakout inside the metals. Of course, gold has not participated in the move. When it comes to all the miners out there, or most of the miners, you want to see gold give you the signal, not necessarily silver give you the signal out here. But silver did have a nice trading session yesterday. However, it was 30,000 contracts going into the downdraft with 54,000. So that's the matter of perspective that we need. We're seeing a move higher on lighter volume inside metals. Light sweet crude is doing everything it can to try to break out and move back to the top of its consolidation range. And what is holding it in check is this trend line. It can't. Just hasn't been able to get above that trend line. That's what's needed in order to confirm any kind of bullish move. And that's a trend line coming off of the April 18th low, 85.61, to the low that was put in on June 24th. The continuous contract is what we're looking at and basing our decisions on. That was 92.67. That trend line has acted as resistance. Once it's up and above that, that will go ahead and set up a run to the 109 area, the top of the consolidation range. If we take a look here at bonds just having a nice little sideways move out here. It's a consolidation. It's been consolidating ever since September 25th. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I know you didn't need me to count, but I did. So 10 days worth of consolidations. Remember, 65% of the time, consolidations resolve themselves in the direction they came from. Well, in this case here, bonds were coming from the lows. That would say the consolidation would resolve itself in the direction. Now, the consolidation is pretty low out there. That consolidation, when it resolves itself, should run right into resistance at about 135. And that's going to be the key area for us to be paying attention to because of that long consolidation pattern that it broke out of. That actually says bonds want to get to the 117 mark at some point in time out here because of that consolidation pattern being broken. Natural gas out here. Natural gas this morning is taking on the resistance of that descending price channel that it has been traveling in. It did what it was supposed to do, which was come back and test the hammer candle. We know where the bulls are hanging out inside of natural gas, and that's going to be the low of September 26th, and that is at 3.629. That level was tested. You had 25,000 contracts. That level was tested with, 42, a lot of volume out there, and 44,000 on October 7th. That just shows you the strength of that hammer candle from September 26th. Now, price did what it was also supposed to do, and it has run into the resistance of that descending price channel. A break above this, that would be very bullish. Not only very bullish, that would likely set up an A to B equals CD up pattern. That A to B equals CD up in natural gas, that'll take you, your first objective would be about $4.19, 4.199, but it must clear the descending price channel. It is not overbought, other than on a shorter term indicator out here, but it is not overbought, and therefore it's got freedom to break through that area and run up to that price level. Or, you know what it'll do? It'll trade in a narrow trading range and probably move all the way back down to the bottom of the hammer candle. So that was on natural gas. Now we're going to switch over and take a look at what is it that we need to be paying attention to during the trading session. Today, tomorrow, I think the lines have been clearly drawn in the sand. I know that not everybody, I know that many people believe that it's just the news that is driving the market, and therefore you really can't make trading decisions. until that all gets resolved. I beg to differ with that. Not that that's not important, but I believe you can just go take a look at the stock charts, and currencies are what rule. And the currency that rules out here, that's the euro, Japanese yen. We see a break of this descending price channel, folks, and it's a break with conviction, and it's a break and price comes back and tests it. That's the 30-minute chart out here. Let me see if I got the 120-minute chart on this one. Yeah, there's the 120-minute chart. It's a little bit clearer for us to be taking a look at. If we see price break through this area, come back and test it, and hold, meaning not come back inside the descending price channel. I don't care what's going on inside the media. It'll be the currency that'll be giving you the signal and rule and telling you that the markets are going to move higher, because it's this currency pair that correlates to the U.S. stock market. It's this currency pair that when there are divergent patterns out here, those divergent patterns resolve themselves in the direction. So that's the beauty. Now, the beauty, if you are of a bearish mind right now, if you're just looking for shorts, well, then you would want to be using this channel line, because price, in essence, then from that perspective, has made it back towards its highs, and this is where you would go ahead and sell the market. And, of course, you're back with, I'm not just saying sell the euro Japanese yen. Of course, you could do that as well. But this is if your belief is bearish, then here's the gift that you've been given, because price inside this currency pair has gotten back to an area of resistance. And that would say, if you would be then saying it's not going to break through this resistance, or maybe you'd say, okay, I'm going to take the short trade, but I'll get out of it and go long if, in fact, it breaks this area. But that's the cool thing about this chart out here. And the same thing when we take a look at all of the shorter time frames inside of the futures contracts. Here's the ES Mini on its 120-minute chart out here. It still has a potential A to B equals CD up into the 1674 level, but you can see here on the ES Mini, you can see it is decidedly in a downtrend channel out here. And so anytime it hits the top of that channel line, that would be a place, if you are of bearish mind, that would be a place that you would be looking to sell. We haven't seen it hit that area here today. I suspected that it was going to earlier this morning, get up to 1674, and then back off and give us a heads up. But you can see that is a nice price channel, very clear what the trend is. And if you are bearish, there's no reason to get out of those positions, because until you see the trend change out here, and the trend will clearly change when you see a move above it, as long as price stays above it, comes back and tests it, and then says, no, I'm not going to get back inside that channel. I'm going to go ahead and change direction. It couldn't be any clearer inside, for me, it couldn't be any clearer inside the ES Mini and what you should be paying attention to. Likewise, the same thing with the Dow. Here's a 30-minute chart for the Dow. You can clearly see the descending price channel that's in. The Dow is not going to turn until it breaks through the top of its rising or its descending price channel as well. Of course, you want to keep that in perspective as to what's going on the daily chart for the index futures, in my opinion. And here we can see that right now the Dow futures are trading inside its August 28th swing point, unlike the actual cash index, which has not made it down to that level. If, in fact, you see the Dow futures close inside 14,849, they'll make a run for the lows, maybe overnight, but they'll make a run for the lows out there. And the other two charts that you must be paying attention to, and that's the strength of the marketplace. That's the NASDAQ. Ooh, and it's broken the 60-point trading range. When we get back from break, we got to go look at that. 877-927-6648. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's off 58 points right now. S&P down 7. NASDAQ, which is where we're going to spend our time, it's off about 1 full percentage point, down $35 right now as we speak. And what we can see here, so this is important for us to be paying attention to. The question is this a real break to the downside? The NASDAQ right now, it's made the 1-to-1 A to B equals CD. I've got a 120-minute chart up on my screen, but it's doing it with a wide-ranging bar. That says it wants lower price out there. So the next levels inside the NASDAQ futures, right now it's trading at 31.76 out here. The next levels are 31.60, 31.39, and 31.15. Well, here's the deal. It's been in a 60-point consolidation trading range. When you break that consolidation, if this is a real break, the low of that consolidation, we're going to say, is right around 31.89 out there. So 60 points, what would that make it? 31.29 would be 31.29ish, right? Would be the area or the target. So that says a 1 to 1.618 A to B equals CD. Now, on the 120-minute chart, let me see here. Hope I don't lose everything. No, I didn't there. So we can see we got some nice volume behind this move here during this 120-minute chart as well. But it is in a oversold condition as we speak. So let me just do this. I'm going to be able to widen the screen up here. We'll get rid of I don't need the volume on the bottom. I can see it on the actual bars themselves. So you can see here, it has last time that it was in this type of oversold condition was way back in the August 27th area when the lows were being made inside the market. So the key here is going to be what the next test or the next bounce in the market is. Does, in fact, price come back up and just test the bottom of this consolidation range? What I'm really using for the bottom of the consolidation range, what I'm really paying attention to is the breakout from Uncle Ben on September the 18th out there. So I'm using, in essence, that open right around 32.24 out there, 32.23.75 as the number. If it fails to get back inside the consolidation level, then the NASDAQ futures, which has been strength inside the marketplace, has just given us a signal that, you know what, lower prices are on their way out there. So the two charts that, in my opinion, that you want to be paying attention to is going to be this NASDAQ futures contract. You can put on whatever time frame you want. I've got on a 120-minute time frame, so it's a little bit bigger. Let's go take a look at the daily chart. Let's go see what it's doing on the daily chart out here. The daily chart, give me a moment to pull that up, see what it is doing. NASDAQ futures also showing, breaking down below at this stage, Uncle Ben Bernanke's day, September the 18th. So they held, and on the daily chart, you can see not overbought nor oversold. So on different time frames is how you use it in order to understand where you start to see markets moving sideways to bouncing or what have you. So on the daily chart, plenty of room to run to the downside. Thus far, if you take a look at retracements off of the lows out here, a 0.382 retracement. So not too damaging, but the damage is really by going back and taking a look at the intraday chart out here, breaking that 60-point consolidation and coming into the 1 to 1A to B equals CD with a wide-ranging bar. It's broadcasting that it wants lower price out there. That's not how you want to see a D point made of an A to B equals CD down. So pay attention to the NASDAQ futures contract, in my opinion, and also be paying attention to that euro Japanese yen currency pair, because you want these things to be in sync with each other. This is the daily chart for that. We can see that ran into resistance out there, and that's what you should be paying attention to. Other than for the next hour, you should pay attention to Basil Chapman, and after that, you should be paying attention to the options hour. And because it is Tuesday, that means we've got Daryl Martin, David White, Andy Hecht, and then our fearless leader, Tom O'Brien Show. Folks, if you're off to start your Tuesday, have a terrific Tuesday. I look forward to seeing you in the morning. Have a great day. Take care.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on parts, plus a 64% on rest. And Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.